Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good to have you back on.
Good afternoon, Devin.
Well, the Bank of Korea today decided to keep its key interest rate where it is at an all-time low. There's been a degree of pressure on the BOK to raise rates under certain circumstances, but it seems this decision, at least in part, is related to the fourth wave of the virus. Tell us about this decision at the BOK.
There is a strong expectation on central bank's interest rate hikes in second half of this year due to higher inflation and financial instability. But today, Bank of Korea decided to leave the key interest rate at current level of 0.5% because of worsened coronavirus situation. Even though Bank of Korea is giving strong signal of raising interest rate until the end of this year, it won't be easy to raise interest rate because the higher interest rate can neutralize the effects of government's emergency supporting program financed by over 30 trillion won supplementary budget. So my expectation is when Bank of Korea is about to raise key interest rate in the fall, there will be strong pressure from ruling party and government. It means that Bank of Korea should persuade ruling party and government that stabilizing inflation and financial market is more important than recovering economy.
Well, inflation in the U.S. last month we see is at its highest since the financial crisis 13 years ago. Consumer prices rising by 5.4% from a year earlier. Fed Chair Jerome Powell, though, saying he still expects inflation to come down and he's not planning to raise rates sooner than previously forecast. Professor, tell us what's happening with inflation and the Fed on that front.
In previous FOMC meeting in June, U.S. Fed said that high inflation in U.S. will be stabilized very soon. But high inflation goes on with 5.4% inflation in June, which is the highest level in 13 years. Overall, this stronger inflation pressure means that the possibility of tapering or less money supplied by Fed would be closer than expected. Mr. Powell, however, repeatedly emphasized that he still expects price pressure to ease later this year. But he actually left the door open to raising key interest rates by saying that the central bank wouldn't hesitate to raise interest rates to keep inflation under control. So depending on the path of inflation over summer, the direction and timing of the Fed's tapering and interest rate change will be more clearly seen.
Well, turning to the markets, stocks on Wall Street overnight were mixed. The Fed perhaps playing into that. Tech shares on the NASDAQ closed lower again, but it was a gain on the S&P and the Dow. What's the story in the global markets?
Mr. Powell's speech at Congress yesterday gave a breathing space to Wall Street. He clearly supports expansionary monetary policy of zero interest rate and ample liquidity supply to the market under current circumstances of U.S. economy. But U.S. market had different response to Mr. Powell's speech yesterday. Dow Jones gained 0.1%, but NASDAQ lost by 0.2% yesterday. But thanks to Mr. Powell's speech, 10-year Treasury yield decreased down to 1.3% from previous 1.4% in a day. Most of the European markets fell between 0.1% and 0.7% due to stronger inflation pressure in Eurozone and European Central Bank's possibility of key interest rate adjustment.
Yeah, and interestingly, we saw the exchange rate here in Korea come down significantly from about 11.50 down to about 11.41. And Korean stocks were higher today, too, largely, it seems, on Powell's comments. The Kospi getting a little closer back to that 3,300 mark it crossed recently. The Kosdaq with an even bigger gain today. Tell us about the domestic market.
Domestic market positively responded to Mr. Powell's speech on keeping ease monetary policy today. And Bank of Korea's decision of not to change key interest rate at 0.5% also gave another positive momentum to the market. Kospi recovered yesterday's loss with 0.7% return today. Kosdaq market also gained 0.9% with a fourth straight day rise, including today. Particularly, both markets' rise was led by foreign investors' stock purchase. On the other hand, domestic individual investors sold stocks.
And in Korea, data show that import prices rose last month again to their highest level in 6 years and 9 months. Export prices, too, up for a 7th month in a row. What's behind the rise in prices coming in and going out?
According to Bank of Korea, last month's import price has increased by 2.3% in monthly basis, and it is a highest increase since September 2014. The main factors of higher import prices are skyrocketing oil price and other natural deposit prices, like coal and iron ore. In June, Dubai oil price increased by almost 8% in a month, and coal price also increased by about 5% in a month. The problem related to higher import price is that it drives up domestic price level even higher. Recently, domestic inflation has exceeded 2%, which is Bank of Korea's inflation target over 3 straight months. So it is more expected that domestic inflation will stay higher due to higher import price.
All right, Professor Kim, we'll keep an eye on that. As always, thank you for sharing your time with us today. We always appreciate your insights.
Thank you very much.